G'day everyone, welcome back to Pete's Investing, June 23rd, 2023. This is a US Canadian dollar currency update. On the weekly and daily, we're in a bearish momentum on our indicators with a new oscillator down there. However, on the hourly, it's broken up into a bullish, and we've also got this bullish divergence currently playing out. So let's look at each of these. The triple moving average of the price chart, the moving averages of the CCI 150, and our new oscillator are all downtrending, which is giving us this bearish signal, and it's been doing that way for a few weeks. On the daily, likewise, it's in a bearish momentum on those indicators, but you'll notice it's broken below this previous support at 132.26. We're going to actually lower that to this new, that's our new support level at 131.39. And if I zoom out, the support, the resistance at 139.77 up there is still valid. So there is nothing else to see here. There is obviously a bearish movement on our indicator, but there is a big bull candle at the moment. We may see a bounce here, and that's illustrated more by the hourly chart. So if I zoom in here, you can see there that it's broken up into a bullish movement, and that's supported by this bullish divergence on the CCI. Now, you see there's a bearish divergence on the price. So for this to work, we need to see the CCI continue to the upside, and we need to see the price as well break above this channel. So let me just draw the parameters around that to illustrate where the entry will be to go long. So we would move that to that lowest level candle there, and move the channel to the highest wick or candle within that divergence range. So for this to work, we need to see the price break above that channel there, and we need to see the CCI also make higher higher points. And once that does that, then we'll set a target, and a target can be from that lowest point, and I usually go to a significant high, and I'll just pick that one there because that's got a couple of highs there which sort of correspond. And so that might be a bit too close to the breakout there, so we'll set a target, the next closest area, which will be on the same line as that diagonal trend line. That'll be our initial target range. So that could coincide with at least bouncing or hitting this diagonal trend line as well. But the target area is now drawn on the 38% to the 50%. Now we could have set a target down here somewhere. Let me just draw that as well, just to cover my backside. That is a very close target if it breaks above this channel. So it actually may take a few hours to break out, but it could potentially, if it breaks out of this channel anywhere there, that'll be our initial target, and that'll be our secondary target. Now, of course, there's no guarantee it can go up. It could just break down. And for this divergence to fail, we need to see the CCI break below that level there, where that this level here needs to break below that level there, which would cause this trend line to become a bearish momentum, and that'll be in line with the price chart as well. So if it breaks below that point there, that's where it invalidates the divergence. And if it does that, there'll be no harm done, because most likely the price would also collapse and break below this support level as well. So that's where we are at the moment. Now that's the divergence. I like to use divergence as a potential area to exit the trade. And by what I mean by that is, you can see here if you're going short, primarily with the weekly and the daily, you would have been going short primarily over those last few days in line with that weekly and daily trend. So beginning back there, you can see there on the left, that's where you would have started going short. So from this period on, you would have been going short, and this is an area you start probably taking your profits and closing out your positions. And that's where I use divergence. Or if you're inclined, you can actually trade these divergence as I just demonstrated there. And up here I've got a long back test and a short back test demonstrating those positions using the weekly and daily trends. I don't use stop losses. You can see there where it averages down. It just shows you there as the price is going up, your short positioning was averaging down, and as the price was going up, you're minimizing your averaging down. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.